Are you feeling overwhelmed by taxes, uncertain about your business finances, or worried about protecting what you already have built? Well, you're not alone, and there's a better way. I'm Ashley Freeman. I'm a tax and asset protection attorney, and this is Tax and Money Mastery, where faith meets financial wisdom. Each week, I'll show you how to legally reduce your taxes, manage your money with clarity, and protect your business and personal assets so that you can focus on what truly matters most: God, family, and career. Proverbs 10:22 says, "The blessing of the Lord makes one rich. He adds no sorrow." So grab your coffee and settle in. This is a podcast you can't afford to miss. Hey y'all, Happy New Year and welcome to Tax and Money Mastery. I'm Ashley Freeman, your host for today, and we're going to talk about the 5 hidden traps that are costing you thousands of dollars. So, disclaimer, I am a tax and asset protection attorney, but while I am not your tax and asset protection attorney. So if you hear anything in this podcast today that you think may apply to you or anything like that, please contact your personal tax advisor, whether that be your CPA, tax attorney, or whoever. That being said, let's jump right into it. So number 1, misclassified workers are costing you money, or could be costing you money. So many business owners accidentally classify employees as independent contractors. This can cost you thousands in penalties, back taxes, and interest. Thursday, the podcast is going to be on 1099 versus employee. I actually had a client who had paid a worker over $100,000, and she was a flipper. She flipped properties, and he did all the construction work, evidently. She never got a 1099 from him. She never got a W-9 from him, and now he is in the wind, and she can't get hold of him to get one. So she now could be responsible for his payroll taxes. He's probably not going to report that income, although we don't know for sure, but he likely is not going to report that income. So my recommendation to her had to be, go ahead and pay that 24%, which would be required if you got caught by the IRS for not having a W-9 on him. One of the things you can do is, try as hard as you can to get a hold of them and keep evidence of that, wherever it may be. If it's phone calls, take a snapshot of your phone that you called on this date, this time, whatever you got to do, emails, any of that, all that can be used to help defend your position and that you did try to get a hold of them. But the very best thing that you can do is not ever pay them until you get that W-9 up front. Pretend you're any other employer, and if you went to work for that employer, you could not work or get paid until you filled out a W-4 if you're an employee. So you should not be any different. All right. More to come on that, like I said, on Thursday's podcast. Number 2, neglecting retirement contributions. So a lot of people don't do this. They don't maximize their contributions. When you make a contribution to a 401k, a SEP, for some people an IRA, it all comes off the top of your income. You do pay Social Security and Medicare tax on that, but you don't pay income tax until you take it out when you're old and gray or whenever you take it out. There are limits, of course. Every year they change usually. And the older you are, if you're over 50, there's make-up contributions that are like $1,000. This year there's a couple of other age milestones where you can put in just even a little bit more. So don't neglect to do that. You had until the end of the year to do that. Now in IRAs, you've got actually until April 15th of this year that you can make contributions for last year. That's just in IRAs. You can't do that in 401ks. All right. Number 3, improper home office deductions. Those are probably the number one red flag for the IRS, especially if you're filing on a Schedule C, C like cat. So the IRS allows home office deductions, but many people take them incorrectly. They exaggerate their expenses, and that's what triggers audits. We have a saying in tax that pigs get fat, hogs get slaughtered. So if you're a hog and try to get more than what you should, the IRS is going to get you. So be careful on that. Don't deduct personal space or expenses that aren't directly related to the business. Deduct only the portion of the home that's used exclusively and regularly for business. So it can't be the guest bedroom where it's not your office when a guest is there. All right. It should be used exclusively and regularly for business. Now, that being said, you can add other areas on there. If you have an exclusive office, but then you also have like a closet area, maybe a large closet or even another bedroom that you use exclusively for business. Maybe it's for your spouse has an office as well, or maybe it's inventory you keep in it or things that you use for your business. That area can also be counted in with your office. Don't rip yourself off, but also don't be a hog. Also, if you have, rather than a home office, if you have a C corporation or an S corporation, it's no longer a home office. It's now called an administrative office. And C corporations and S corporations are much less likely, way less likely to get audited. Just keep that in mind. We use S corporations and C corporations a lot in tax because of all the tax savings that it can create for you. Number 4, overlooking state and local nuances. This happens to people all the time. They assume that the federal rules automatically cover state taxes. The rules are not the same. They can differ widely. For instance, you can do a cost segregation study at the federal level, and if you meet rep status or material participation for a short-term rental, that income can be used, or that those losses can be used to offset your W-2 income. It's not the same in California. California doesn't recognize it, so it won't offset your income. They don't even recognize the cost segregation. The rules are different. They vary state to state. I couldn't possibly go over all of them in this podcast. So check with your state on specific things that you might be doing. I know in my state we have like homestead. We have home. What do you call it? Home heating credits. We have things that we don't have at the federal level, but they may or may not apply to you depending on your income, depending on, just what the law says in general. That's state and local taxes. Stay informed about what's going on in your state so that you'll know. Number 5, not tracking business expenses accurately. This is huge. I had a client just a couple weeks ago that was making bank. And I mean, they were raking in the income, but I could tell that they were not taking care of their bookkeeping. If you are making that much money, take care of your bookkeeping. Hire somebody. It is so worth it to take all that off your brain. I had a client that, because of their bad bookkeeping, and they knew it, they were going to lose a bunch of money. I had a client that did not know what she sold her house that she had lived in and was going to use the 121 exclusion, but she didn't know what the basis was in her home. She had no idea how much she paid for her home and what she's put into it over the years. That is what your basis is in your home. How much you paid for it and major improvements that you've put into it over the years. Like you put a new roof on for $10,000. You put in a pool for $20,000. All those things add up and they get added to your basis. When you have the 121 exclusion, if you've lived in it 2 out of 5 years, you can exclude $250,000 or $500,000, depending if you're single or married. And that can be excluded from any income, any capital gains that you might have on top of the basis. So you get to add the basis in there too. She was looking at thousands and thousands because she had the property for a very long time, and I think it was in California, and she was looking at a lot in capital gains, and that's just because she didn't take care of business. She wasn't paying attention. She wasn't keeping track of anything, which brings us to the end of the podcast. Not just because I got to get my stuff out of the oven, but because we've already gone through all 5 things. If you want to know more about the differences between 1099 contract labor and W-2 employees, be sure to catch this coming Thursday's podcast. That's all I got for now. If this podcast blessed you in some way or helped you, please share it with another business owner. And feel free to ask any questions. I leave my email down in the show notes. And with that, I hope you have a great day. Thank you.